Hello everyone and welcome back to the Finance Kit. As always, my name is Dion, here to push your financial mindset towards a better reality. And today I will break down 6 types of investments, how they work, and how you can make money online with those investments. If you're part of this community and you have already subscribed, well, welcome back and thank you very much. And if this is your first time here, please hit the subscribe button right away for more personal finance and other money tips. Subscribing is free, doesn't cost you anything, and it does help a lot. So, for some odd reason, people think that investing is a daunting task, or it's too hard, or too expensive. Well, it could be for a person who doesn't know what to do. You might think like that, but you can learn it quickly. It's not a complicated process. So before you start investing, you need to know the different types of investment vehicles out there and how they work. This is why I'm here. So smash that like button and let's get started. The most popular type of investment that I guarantee you hear about almost every single day is stocks. A stock, or also known as equity, is a security that represents the ownership of a fraction of a corporation. You buy one share of any stock and you own a small piece of that company. It's as simple as that. Stocks may be the most well-known investment out there, but it surprises me that so few people know actually how to earn money effectively from the stock market. Buying stocks essentially means that you're buying ownership of that company that you purchase shares of. You can easily purchase shares of publicly traded companies on the stock market with a click of a button. So when you open an account with Fidelity, M1 Finance, or Robinhood, just to name a few trading platforms, you can purchase shares or fractional shares and invest in stocks. Those are publicly traded companies on the stock market indexes like Dow Jones, S&P 500, NASDAQ, and many others. Your goal is consistent returns, right? Well, that is not always possible. As we know, the market fluctuates up and down, but over time, historically, you can count on 6 to 8% a year of returns. So if you haven't started investing yet, now is the time. Next asset you can consider for your portfolio is bonds. When you give a loan to a company or a government, it's called bonds. When you buy a bond, you're allowing the bond issuer to borrow your money at a fixed interest rate. Bonds are generally considered a safe investment. Therefore, they return lower interest rates compared to stocks, for example. The primary risk is that the issuer might default on the loan and then you do not get paid your returns. You can buy high interest rate bonds, but these are riskier investments to a company that might not have enough cash to pay you back. This increases your risk, and therefore your reward is increased as well with the high-risk bonds. Government bonds are the safest bonds as they are backed by the government and will only fail when the government fails. Interest rates in these bonds is generally paid at regular intervals. That is why when people approach retirement age, they shift their portfolios heavily into bonds, as it is a safer option comparing it to the stocks. Another very popular class asset is mutual funds. There are hundreds of thousands of mutual funds out there to choose from. This might confuse many people as it can be a tough decision to select mutual funds because a mutual fund is a basket of stocks held all together into a single asset. It makes it more diversified option. So you need the basic types of mutual funds that are out there in the market in order to make an informed decision about what to purchase next. So here are the most popular types of mutual funds that you need to know about. Equity funds. These mutual funds are baskets of stocks in the market. these funds have target of getting a higher return than the stock market index. Usually, these are actively managed funds, which means a qualified money manager makes all the decisions about when to buy and sell individual shares within the fund. Therefore, these funds can provide a good return on your investment, but these types of funds can fluctuate as the market fluctuates. There are a lot of equity funds to choose from, and they can usually be classified into growth stocks, income funds, value stocks, large cap stocks, mid cap stocks, small cap stocks, or combination of all these. So when you want to pick up an equity fund, do a research on the manager of the fund and make sure that they have a good track record. The fees of the fund, so it doesn't cost you an arm and a leg over time, and also what stocks does the fund hold. If all three of those align with your goals, then buy the fund and enjoy the profits over time. Usually, when I buy mutual funds, it is for a long-term holding. In my case, retirement. For shorter goals and profits, I prefer to buy stocks individually. You also have balanced funds. These funds invest in mix of equities and fixed income securities. They try to balance the aim of achieving higher returns against the risk of losing money. Among the different types of investments, they tend to have less risk than equity funds. Aggressive funds hold more equities than fewer bonds, while conservative funds hold fewer equities, more bonds. So if you want more diversified mixed mutual fund, then look at some balanced funds. I would recommend Fidelity and Vanguard as a great start if you want to research some mutual funds. Next one is actually my favorite mutual funds, and that is the index funds. These funds aim to track the performance of a specific index, such as the S&P 500. The value of the mutual fund will go up or down as the index goes up or down. Index funds typically have lower costs than actively managed funds because the portfolio manager doesn't have to do as much research or make as many investment decisions. Basically, they put together a fund that tracks all 500 companies of the S&P 500, and that is it. I mean, if Warren Buffett recommends to invest heavily in index funds over time, who are we to argue about it, right? So if you want something that you don't need to pay attention to over time, index funds are your choice. Purchase shares regularly and let them profit grow over time. And another asset class overall that you need to know about, and you can easily make money off of it online, is exchange traded funds. Exchange traded funds, or ETFs, are similar to mutual funds, as these are collection of investments that track their performance and can be traded on the stock market. The key difference between mutual funds and ETFs is that unlike mutual funds, which are brought through fund houses like Vanguard and Fidelity, ETFs are traded on the stock market. You can buy all kinds of ETFs, ranging from dividend, growth, value, bonds, commodities, different sector ETFs, just to name a few. Personally, I'm not a big fan of ETFs, but that's just me. I prefer mutual funds as they're actively managed. So that is just my choice. Let me know down in the comments which one do you prefer, mutual funds or ETFs. And lastly, the next asset class that needs to make the list is options. Options can make you a lot of money and they can lose you a lot of money. So this is more of a risky investment type. By definition, in finance, an option is a contract which gives the buyer the right, but not the obligation, to buy or sell an underlying asset or instrument at a specific strike price prior to or on a specific date, depending on the form of the option. Complicated, right? Well, not really. You buy an option at a certain price in the future. If the price is below or above your strike price at the time in the future, you make or lose money. Honestly, if you want to learn more about options and how to trade them, subscribe to the channel as I will do a separate video. It is not complicated as it sounds, but it will take a bit to explain. So, now that you have some of the investment types you can make money with online, you need to get started. It is not scary, and many platforms are free. So, even if you can only start with $50 or $100 a month, do it and start building the portfolio of your dreams. Buy assets that you understand, and preferably buy for a long-term goals, which will give your investments time to grow and bring those profits home. I appreciate you watching this video. I hope you're staying safe. Please hit the like button, and as you know, I will continue to bring you all the updates as soon as physically possible with working around the clock for you. I want to say thank you if you have already subscribed to my channel. If not, what are you waiting for? Hit that subscribe button, hit that bell notification so you don't miss any of my future videos. I hope this video was informative and provided some value to you. Like and share so more people can see it. Down in the description, you will find other helpful links, so you might want to check those out. Thank you for pushing your financial mindset towards a better reality. Until next time, stay positive, master your finances, and take a good care of yourself and those around you.